The markets are down off its record heights. December is a reason to be positive in the markets. The S&P 500 continued its longest losing streak since September. After reaching record high last week, the market's benchmark index is down 1% and below the psychological 1800 level. CNBC contributor Gino Sanchez, founder of Chantico Global, says the recent data are showing encouraging signs for the economy, particularly with employment. Payroll processor ADP reported an addition 215,000 jobs in the month of November, 42,000 higher than the average economist estimates. As well, October figures were revised by 54,000 to 184,000. I think that the market conditions are going to be definitely better. The ADP number is definitely a fantastic number. If you look at revisions for October, that was also very strong. We have to think that we see positive indicators for the labor market in the recent auto sales statistics. Honda to Volkswagen were down, but the big three U.S. automakers and Toyota were up sharply. The automaker November sales increased. Chrysler was up 16%, General Motors 14%, Toyota 10%, and Ford was 7% up. But with positive news comes the increased potential for the Fed to taper its $85 billion monthly bond buying stimulus program known as the QE. That could negatively impact the market by as much as 5% according to our analysis. If you look at the quantitative easing, the buying and expansion of the federal balance sheet over the last year, and you can chart that right next to the S&P 500, there is a strong correlation as well. Some of this PE expansion of the, just to give you an increase of the earnings, but they've been explained that QE in so many ways, the taper would definitely take a notch out of the S&P. However, talking numbers contributor, Global Technical Strategies, and ourselves can generally offer the hope at this time of the year. From a seasonal standpoint, the S&P remains in an outstanding seasonal position. In fact, we are in a sweet spot for the strongest 3-month period of the year, which began in November and runs through January. Take one step further. December, the single best performing month for the S&P 500, the Dow Jones Industrial Average, going back to 1950. That's some pretty strong statistics. We don't base it on the calendar alone, but when you back that up with the technical structure of the chart, it also suggests to me that the significant upside remains. I do see a Santa Claus rally 1.7% year average return going back to 1950. Right now, we're down on the month so that we can see another 2% upside, perhaps another 36 S&P point, and you want to be a buyer on this little mini pullback.